So here is VKMD 5-minute chart. This one is probably more for just educational purposes more than anything else. A big promo that came out on it today, and as you can see, just an absolute train wreck. There's a bunch of volume, great liquidity. The only problem is there wasn't very much upside liquidity, meaning ability to profit. So what I want to do is just go through the chart and kind of map out the things that you could have seen that would have hopefully helped you out from a charting perspective. So again, not really going to break down the chart from a what do you want to see, but more just look in the past and kind of point out some things that, if you had used charts that hopefully you saw, and if you don't use charts, maybe just give you a perspective of why you should consider learning charts and applying them in your strategy. And real quick, when I say 5-minute, all I mean is instead of each one of these bars or candlesticks, as they're called, representing 1 day's worth of price action, which is what you would normally see on a chart, each one represents 5 minutes worth of action. So what we're looking at here, although it might look like a long period of time, is really just a day because each one only represents 5 minutes. So the first thing to keep an eye out for, and just the benefit of using charts is it's very easy to see, is when you have quick movers within a short amount of time. So you look here, we had this big move here, and then you look down here, quite a bit of volume that happened, but it all occurred in 5 minutes. So it went from, let's see, 14.5 cents and then closed at 22 cents in 5 minutes. And then from there, you can see that it was essentially just sideways. Now, the next thing to keep an eye out for is what kind of pattern is forming. So this isn't necessarily a bad thing because there's been plenty of promos and stuff where you've had consolidation and then you see, a giant move upwards, but the benefit and requirement that is to even have this be practical to you is you have to know how to draw patterns and trend lines and have to know how to recognize them. And here we had what I would call basically a bull pennant, bull flag type formation. You could draw it up like that. I would have just drawn it like this because you had multiple times here early after this big move where the price came down here and bounced right off this 20-cent area. So the price came up here, and you can see that this range all of a sudden became basically a high of, well, not basically, it was a high of essentially we'll call it 24 cents with a low of 20 cents. So here in 5 minutes it moved basically 6 cents. Now all of a sudden it's struggling to just do 4 cents, and then later on in the day you can see here the range tightened up even more, where the range was then 23, we'll call it 24 cents again, and then with a low of 22 cents. So this range tightens up even more, and you got to keep in mind there's still relatively nice volume flow, but yet it's just bouncing back and forth in this tight range. Again, not necessarily a bad thing, but you have to see how it reacts after these channeling things. And then right here is where the chart became pretty kind of transparent, and where the people that did use charts and people that are chart savvy, if they're disciplined, that is, probably either took off some of their position or just completely bailed because he started to have 1, 2, 3. So here is 15 minutes right here of red action, and then it came down here, and lo and behold, you can see bounced right off this 20-cent area. And then for the people that were still hanging on, that wanted to at least see how it acted around this support, this was a sell right here when it broke through that 20 cents. And if that wasn't convincing enough, you did have the 50 period down here at 18 cents. But if you understand charts and understand how to kind of operate with them, then this would have been the area to sell right here at 20 cents. And then from there you can see what happened, just a complete train wreck and fell off the map. Down here volume wise, you can see that during this downwards move, volume started to increase, and increase in volume is good when the price is going up. But when you see increasing volume and the price is going down like that, that's just another sign that something just wasn't going right and something that you want to keep an eye out for. So again, let's just touch on the bases here. First sign that something might be a little fishy, massive price movement in a short amount of time, 5 minutes. Next, basically just started going sideways for a long period of time after an easy move up, and again, that's kind of neutral, not necessarily a bad thing. But then right here, started to get red candle after red candle. And then kind of the straw that should have broke the camel's back was right here when the price fell below this 20-cent area here. That would have definitely been where stop loss and so forth should have gone out. And then it was just basically down from there with increasing volume. So again, like I said, not really analyzing what I think is going to be happening with the chart. Just looking at the past. Hopefully this helps out. Hopefully this shows why at least I personally think charts are worth using, charts are worth learning and applying in a strategy. Because, the fundamental players, they could have still been holding here saying, well, the fundamentals say this, or, Well, the investors relation person told me this, or I talked with the CEO, when it's down here, and he said everything's fine. Well, the fundamentals can say things are fine, but at the end of the day, all that matters is price action and volume, and that's what charts focus on. And when the price action and volume is going down, who really cares what the fundamentals say? You got to listen to the chart before anything else. So that's kind of my spiel here. Like I said, hopefully it helps out. Hopefully it encourages you to at least consider using charts and learning them, and just kind of as a guide to help you avoid situations like this. Because I can guarantee you there's some people up here that bought and then refused to sell, and now they're in a world of hurt. So hopefully that wasn't you, but if it was, just learn from it and possibly consider using charts in your strategy. Hope this helped. Thanks for listening.